Morning, P. How's your week?
Really good. Just I went kind of bearish, and that worked out for me on a couple things. The SQs always good to have, and yeah, just some surprises for me. Honestly, like coin collapsing a little more than I'd expected. Really, kind of outpacing what was happening in Bitcoin. So definitely a lot to talk about and study there. Just more I just see a lot of bad trading on Twitter. I just it's I when you're like engaged on there, you just can't escape it, and you get the urge to respond sometimes.
Oh, I don't even know if this is the right place to ask it, but you know me, I always put it out there. How much more are your eyes open last year? Because that time last year, I was trying to get you to walk away from a bad situation, and we hadn't yet. We're not even to that year date. But how more open are your eyes now to all that stuff?
Yeah, I mean, very much so. I can spot red flags, with people who want to call things out, and um, you can tell who knows what they're doing by the contracts they pick and the strikes.
Hmm.
So yeah, I mean, definitely a lot more open
So
to
so
what's
second
happening.
question, so I can get a number, and I'll give you mine too. I like the number games. How many of the people that you followed in the Twitter heyday, in your opinion, were full of shit?
Probably over 90%,
Okay.
honestly.
All right. No,
Yeah.
accurate. All right, because that's what I was gonna say, and I was gonna say that's where the creation of I'm on Twitter, so I know what not to trade. That's where that came from because that is the accurate number, or very similar to what I have in my head, in my opinion. So
So, so kind of a quick recap of my options journey. I mean, anyone who gets into them on Twitter, you see people these posting these ridiculous gains and really risky spots. And when you actually start to actually trade those, you start to see it's not as rosy of a picture as they see. So when I experienced that, I retreated into oil and basic materials and like Bank of America, finding contracts that are safer and cheaper and like and all of that. But then coming out of that and really getting a lot of experience and actually getting into large caps, you really see that like anybody trying to trade 20, $30 Apple
yeah,
contracts,
yeah.
it does not have a big. They're buying one or two and they're acting like they're making these huge gains on it because there's just no reason to buy contracts that far out of the money on something like Apple. You're going to get closer to the money. You're going to buy yourself time. The people who actually know what they're doing, that's what they're after. So yeah, I mean, I definitely it's been an experience for me.
Yeah, and my option journey history is none because it's too risky. It takes a lot of work. You need better timing, and it's really risky. It really is. I mean,
Yeah.
you are kind of playing a very small event because the contract is an event. It's a date, a specific date. So you're like playing an event, in my opinion. Um,
Yes, and I've had a tweet about this where I said that you know the reason for the pattern day trading rule as the market lawmakers state is that it's to help people reduce risk. Like you don't want people just piling into 100 trades a day or whatever, but they're more than happy to let anybody with an account of $50 trade options. And options are a leveraged trade. Like you are controlling 100 shares of something, and there's incredible risk there. But they want people to trade those because it's so easy to make money off of all these SAPs out there. So if you're going to do it, you got to understand that that's the environment you're in, and you have to operate. To me, kind of on the periphery, not trying to catch full moves, getting in and out quickly. Just finding ways to manage your risk because people aren't going to stop trading them, but I think you can do it safely. And the Twitter environment is still not conducive to that.
Yeah, for me, trading in general is that it's filling your cup, right? Taking a piece of the
Yeah.
move and repeating the process, not hitting home runs every time and 11 trades to 100K or whatever the case may be. Like that's not trading. That's really not possible. For the majority of the people. I don't want to say anything's impossible, but that stuff is not possible. But from the option side, I've kind of, you figure it out after a while. Like the smaller contracts and the crazy positions and stuff like that is just because of account size. Um, they're swimming upstream trying to make $1 million off of a paycheck, and that's just like not the way to spread the word of how to make money in this market. They should literally just be taking 10, 25% of their paycheck if they can afford that much and putting it in something long term and going back to work. It'd just be a
Yeah.
way better strategy for those guys. I mean, they have one thing. So let's put it that way. A little talk like they do. Our advantage is we got a little bit of knowledge and money. Their advantage is they got a lot of time, and they're not using that at all or teaching people. I mean,
Yeah.
I stress that to my son because he's their age. Just put a couple $100 in every month. You'll be all right. Even in this market, I tell them that. Like, just play the safer stuff, put it in. Don't worry about it. You're 20 years down the road, you're gonna be fine.
Yeah. I mean, absolutely. If actually, I was looking at all these tweets going around about if you put $1,000 into these stocks a year ago, this is
Yeah,
what they'd be
yeah,
doing now. Now, unless you're talking Carvana or Coin or something like that that just got obliterated, even like Meta, that's $800 now. You
yeah,
lost 200, but
yep,
that's only if you bought one time 1 year ago.
yep,
So if you actually are, looking at charts and trying to learn something, or even if you just DCA every month or something like that, you're fine. Even on something like Meta that had just an utter collapse.
yep.
So the people starting now, the young people starting now, are actually in a pretty good spot. Um,
Yeah, yeah.
yeah, I think there's a lot of potential there.
If you're aware right
And
now, man, man.
yeah, and
Um,
where I do think options are good, and I'll say this, and I've really come a long way here is when you look at leaps, particularly on mid caps or the smaller large caps, and you go 4 6 months out, um, you greatly reduce your risk in doing that. It's not quite as safe as shares, but there's a better reward than shares. So I could buy
yeah.
5 shares of snow or one leap of snow, and a 10% move, which it's done several times, is going to double those leaps, whereas it's just going to be 10% in shares. But those leaps, they're $800. So you have to get to that point where you're comfortable buying something at that price. But I mean, that's what
I hate.
intelligent people do with options.
Yeah, no, and I hate
That's what
the.
that's what they're for. That's really what they're for. I mean,
Yes.
is those longer term control, the option to buy it, instead of a lotto ticket.
No, and that's where it all comes back to that account size for me on 90% of these people is because it kind of forces them to play that idea of smaller account. I need to make a lot of money, and again, it just all comes back to it's not the way to be teaching people. You're better off telling them how to just put money in and go back to work. I,
Yeah, I mean, if you know 0.2% on this on SPY can ruin your day,
yeah,
you're
yeah,
not you're not trading the right way. So
exactly.
because that's nothing. I mean, that one candle on a minute chart could do that.
Yeah,
Some
you're
fund
gambling.
comes in and swaps out. Yeah,
You're totally gambling. So you mentioned and I did see that. I think the one I seen was 2018, and the
yeah,
number one on the $100 list was Tesla, and I think it was like $900. But there
yeah.
was some like not obscure. That's my thing about it. It's not obscure names you need to be going into. Like you can just go in some pretty basic stuff right now, especially if you have 20 years to invest before you're even going to think about like. I mean, if you're 22 and you're retiring in 20 years, you're retiring at 42. Trust me, it's not a bad life. It's not.
Yeah, right, exactly.
um,
And that's where the difference between Dow and Blue Apron comes in
yes,
too.
yeah.
I mean,
So
so
DCA into
yeah,
Dow, and then I mean you're going to be getting an $800 check when you're 25. Like, you're gonna be, oh,
yeah,
extra $800 because I've been putting this $100 away every paycheck. Um, but Bitcoin, these are year to date numbers. Year to date. Um,
yeah.
Bitcoin up 46%, oil down 22%, and or excuse me, 2.2% down, and stocks up 7.7.
Interesting. That is actually a little surprising. Um, that so basically, by doing it year to date, we're sort of seeing we're kind of used to thinking of oil as having this massive run, but we're starting to get some distance from the biggest part of that move, and then the Bitcoin one, yeah, that's a little surprising.
That one just tells me that timing is everything, and I try to say that. I've been trying to
Yeah,
say that. Like, your timing. I mean, if you time things right, you're perfect. The stocks was the most surprising to me. That it's still like close to like the 10% average, 7.7, adjusted for inflation, right?
yeah, absolutely, and I think again it comes down to I talk all the time about when people talk about the market, most people are talking about tech, like that's to them is the market.
Yes.
So
Yeah. 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 Yeah.
there's
No. And
just
you
so much
you look
other
at
stuff out
that.
there.
You look at the. I mean, I wish the info I had a couple more numbers in there, because like you digest that stuff real well. So I was interested in what you thought about that in general, like, because I know that will lead to oil.
Yeah, yeah, no, I think it's been more I think than people um, assume or or want to account for, and there was so much unique in what world events that was pumping things up like post COVID and all of that. So so you just have to sort of adjust um, your perception of a lot of these names. And there's some all time highs you kind of have to ignore that can prevent you from seeing the relative strength and stuff like Netflix's recovery or Facebook or or whatever. Um, so yeah, I think a lot of the doom and gloom's kind of overblown, and that's one of my points about the QQQ as well.
Yeah, no, and I think you do get days like Thursday. I did want to talk about that, where I mean, if last year I think it was the 24th, so I think we're still like a week ahead of the what was their crescendo last year. But I've
Yeah,
been mindful of having a day that was just to fall out the floor, and Thursday was kind of the day we had that, but it wasn't nearly as like. I mean, people kind of shook Thursday off. Um, and for me, you're gonna see that, and I think that's healthy to see, in most regards, as long as it's not like a news-driven thing. Um, but I mean, how can stuff run 100%, 50%, and not pull back? Um, Pull back, find a level of support, and then move on. Because a lot of things have just blown the roof off of multiple levels. Um, which, if you're a bear, I don't know how you stay a bear, because because
right.
like Netflix is obviously probably the best example because it was his first. Um, it way overreacted, but you're seeing it now with like I mean, Tesla probably coming back to that 184 and sitting there for a while, but that's still 80% up from when it ran, and people are complaining that it's not 140 150% up from when it ran. Um, but for me, this is a healthy bottom, healthy turn. It's kind of what it feels like. Um, I don't know where you on that. You see things a little different because of the flow, but just from a TA's perspective, these charts needed to kind of pull back. Um,
Yes.
our buddy
Yeah,
Spy,
absolutely.
the Spy candle's perfect this week. That was a perfect Spy candle for me this week. It's what you want to see. Um, Inside the top, kind of finishes in the same spot.
Uh, yeah, absolutely. And so if you're a bear, you keep falling back on macro conditions that's just gonna come back to bite everybody. That this whole rally was just shorts unwinding, which it went a little further than that. I think I don't think that can explain all of it, but I think as a bear, you just have to be very picky because there are so many good opportunities in coin pulling back, or MSTR had no business being $300. Um, that that was not going to hold, and so even if you didn't notice it at 300, it came back to 280, and it's like, okay, it's showing some weakness here. I'm gonna short it from here. But when you're just trying to pile into, um, well, I guess the indices in particular, thinking you're going to short these down for a 15-20% move, very difficult to time that. And the market, you can tell keeps shrugging off bad news. Even if it's fake, data keeps coming in kind of as expected. There's just a lot more pushing things up, and more importantly, stabilizing on the pullbacks than there is selling pressure. I said a few weeks ago, the most uncommon day that we're going to have in the market is a trend day down, and it does happen, but it's rare. And do it, I think, playing the percentages that you get a big flush at open, you're going to get some recovery.
Yeah.
You're not going to get SPY going down 4% a day anytime soon.
No, secondary moves are safer. Check the
Yeah,
weekly for the real trend. Just check the weekly for the real trend. Um, yeah, yeah. I mean, that's the for me. That's just not having a good set of rules most of the time. Like when people ask about a certain thing, or like, should I short here or something? It's like you have to just be zoomed in on. For me, you have to be zoomed in on one chart, and you're not looking at the big picture because it usually dictates. The weekly usually dictates what's going to happen, especially with the stuff that you play. I noticed a lot of things that you play, the more expensive stuff, has like $30
yeah,
range. I don't know why, but $30
yeah,
candles is like your favorite thing. I don't know why.
yes.
Is that really a thing?
It is. So it's a combination of the option flow being plausible and the price of that contract. So basically, I'll want to, on a large cap. I'll usually want to play a contract of on the shorter expiration stuff of 150 to $250, looking for a move to $400 or so, and that kind of range in the SaaS stocks or N phase or whatever, is is common enough and readable enough for those plays to be worth it for me.
Yeah, it's interesting. I just noticed that it's part of your setup. Because that's what I look for. I don't. People like try to dissect the company a lot. Yeah, you have to see a setup too. I mean, that's really what you want to learn is just one or two really good setups, um, and that's a common denominator in yours is $30 candles. So
Yes.
large cap $30 candles. Awesome. So we do have kind of wrap these two together. We do have this the CPI and PPI this week. Um, and then that's obviously going to affect the big old SPY. I think that's the more important numbers, but they're so small, very hard to predict how the market digests them.
Yeah. Yes. I mean, you're talking about 0.2% is a difference between a pre-market move. This is an important part. A pre-market move of 1.5 to 2%, as going to depend on those numbers. And if they come in as expected, that move will probably be up. Um, my biggest piece of advice really was important last week, which is don't chase a pre-market gap up or gap down, especially a gap up. You just really are better off to wait. That gap up, that last one we had, completely collapsed.
Yeah,
So
yeah,
that can happen too. Even if the news is good, you get that initial spike, and then you know reality sets in other ways, or the market had some bearish setups. Um, you see a lot of manipulation to move around this JPM collar. That's why SPX kept going to that 4065 number. Um, and so the data is like an initial jolt, and then it's like you let that happen, and then you trade from there. Unless you're trying to play some lotto through it, um, you just watch that move happen, see where your stocks are at particular levels, and then trade, and then trade from there. And just don't put it's too much into it. It's not make or break for the stock market with the CPI number. And in fact, we saw them adjust previous numbers up a bit, which really infuriated bears who got wrecked on those release dates.
Yeah.
But I mean, do you put anything into adjusting those numbers as a way to preempt what's going to happen Tuesday? Do you think there's anything to that?
Kinda, but uh, I just think you don't get your bang for your buck on the downside news anymore. That's really what I think.
Yeah.
I don't know how else to put it. But I'm with you with keeping it simple. You play what's in front of you. You don't try to predict that because it's such a micro move. I mean, if you want to have a bias going in, I keep it as simple as, the hot CPI isn't good for us, and a hot PPI, we don't really care about the producers, so that's good for us. Like, if they're taking the increase, right, and we're not taking the
Yes.
increase, so I just kind of look at it as that. But I mean, it's again, the market itself is overall is pretty priced down. So I just think you don't get your bang for your buck on your downside news. So it will absorb it. Um, yeah, I think
And so, and
it's waiting for it. That's more of the thing is it's gonna be slow until it comes out, which is Tuesday, Thursday. Um,
yes, and I'm going to go with the cliche here of the good news is bad, and this is what I mean by it. And this is where that gap up thing comes from. So you take earnings, like Net had great earnings. I played puts on Net at open. Why? Because it was up 10% and the cues were kind of mediocre. And I'm like, well, people are going to take profits here. And this can fall really far. I mean, it's not like they'll just take profits at 2% or something. I mean, it gets some momentum, it's going to just drop. And that's what it did. It gave up that entire 10% and then recovered and ended the day up 4%. So, like, and that was all good news. Enphase did the same thing. So for individual stocks that's happening on these earnings beats, unless your Meta or Netflix,
okay, yeah.
they had a lot of momentum, but
So
that
that's
was different. But
I was gonna say like it. That's the one thing I'm noticing with ERs. If you're a big name, if you're one of those, the old school like Fang or what was the other acronyms back in the day, whatever those names are, you people are buying those up. Um, as long as they're keeping the lights on, like they don't care the news. Tesla,
yeah,
Apple, Netflix was definitely the first one, but those names are definitely at this point in time rolling through ER. Everybody else is still subject to the good news, bad news stuff. It seems like just the regular
yeah,
companies.
and like good numbers, and then one sentence and guidance can
Yes,
just
yes,
wipe it all out.
yes.
And so on the same theme with the broader market with SPY, QQQ, whatever, the best bang for your buck to the downside to me is going to be when they actually do pivot. That you will see kind of a jolt down, and then sort of recovery from there. Like, so we finally get the big shift that we're waiting for. I think that's where you'll see kind of the last big sell off, and then we reverse from there.
Yeah,
That's just my kind of broader idea.
yeah, I wish I would have wrote it down, but there was one report I read where it was pretty flat, like the report was. But when I got into the numbers, their revenue went from like 700 million down to like 125 million, and that's just like a runaway. I forgot who it was, but it wasn't a big name company. Um,
Yeah.
but that's where you got to get into the report because everything else lined up. Like the little fact sheet they give you off the top, it all looked real good. Um, but the one line, like you're saying, in there can have some pretty detrimental news, And if it's related to cash or cash flow, it's not going to like it right now, in my opinion.
Yeah, yeah, absolutely.
Um, so what do you got on Spy this week? We kind of nailed it last week, to be honest with you. I think we ended up 416. You were at 420. You were a little overzealous there. I was at 418, but the 402 at the
Yeah,
bottom, 402 at the bottom. I mean, it's real close, couple bucks either way. 405 was the bottom, so we were a little, maybe a little more open than the inside bar, so it was tighter, actually tighter than we thought last week. But still, that sideways inside bar that we talked about.
yes, and I um, I think we do see at least a test of 402 on the downside. Um, I mean, it could lose 400 if things go really poorly, of course. But I think that the kind of the equilibrium will be like it'll come back to 402 even if it gets that jolt down on Tuesday, and see kind of a tighter range this week. Looking about like 417 is where I'll put it.
Oh wow. Okay. Okay. Um, it's kind of a trend guess for me. Um, are we going to get back into an uptrend or are we going to go check down? And I really am of the mindset, maybe it's just from a risk management side, that we do need to kind of just check down a little bit, just a little relief on some of these things that did have a really good start to the year, and that's going to keep us flat or inside the zone. So I'm going to go with the 415 top. And I have 395 on my 1 year volume profile, so I'm gonna give the Bears a bone this week and say that might
Nice.
be the dip below the 400, but I don't see much below that. And to be honest with you, I mean we were talking 350 to 420 2 3 months ago. Um,
Yeah.
I mean we're at that. I mean we're there. We're at the top of that. That's what we're testing right now. So I mean that's again, a little bit of check back out of that just seems natural. This isn't going to be a V recovery. It's not all coming back in 2023, back to where it was in 19 and 18 and whatnot. It's gonna take years, in my opinion, for a lot of stuff to recover. But you're gonna have these power months, power quarters of decent moves. So I'm for the pullback.
Yes, and one of the things I think will happen within the next several weeks, unless depending on how far we check down. But we talked about June lows a lot into the fall, and the importance of those, and the ones that broke below that, the ones that didn't. The August highs are the flip side of that. That's a number that's sitting out there that I think is sort of begging to be tested, and that's about 430 on Spy. So we're not there this week at all, but I
Yeah,
don't think.
yeah,
But that's definitely a number to keep in mind. It's a strike in flow I look at. So yeah, I'm after that.
yeah. For
In terms of open interest, one really significant contract that I think people should keep in mind is that the puts for at 380 and 375 are both for the rest of February and into mid March. So what does that mean? It means right now there's incentive for the Bulls to not really take a look at those numbers. They want to keep those contracts, pretty worthless. So that's why like 390 is kind of a decent buffer right now. We get below that, we'll start testing those levels. So that's something to watch if we do pull back. I'll look for those contracts to start to shift bearish, and then that might give me some sense of momentum. But for now, they're bullish at like 80% plus.
yeah, I like it. It's I'll save that for the other thing. What do you got on your big flip this week? We got a couple minutes. Let's cover that.
So my contribution to the big flip discourse that I put out there was the most confident part of it was that copper was going to pull back, and copper is now sitting at $4.401, had a drop of 2%, which is pretty huge um, for copper, and overall fell from about 4.15 to $4. So that part of it is playing out, but it's a huge level, and it can even fall below 4 and still be okay. But if we start to like 375 or so, that is a bearish leading indicator for the rest of the market, in my opinion. So in terms of the sell off, copper is outpacing the like SPY, QQ, all of that. So that's definitely something to watch, because a big rally cannot continue, in my opinion, if the floor just falls out and copper collapses.
How
That's just
much?
not how the market tends to work.
How much does that should be? 350? Should it be 350? Three?
Um, like, what do you mean should be?
Like perfect system, perfect world. Like how oil should be 60, 80
Oh,
bucks.
got you. Okay, yeah. No, it should be from 350, um, like three. I'd say like any 375 to like 450. Actually, is kind of the ideal range on it, probably. But it for like a new bull market, I think it needs to stay over 4.
Wow. Okay. I was just looking at the 10 year on that guy, and it's definitely figuring itself out. 4 does seem like the settle spot, though, if you look at that one, um, which is right where we are. I've been watching. There's a lot of commodities watch. I've been watching coal and oil and um, natural gas, but that's another story.
Because the deal on copper, like if you look way back, it hovered around 250 to 3
Three,
for
yeah, yeah,
for
yeah.
years. But I think just in terms of inflation and where the world is and all of that, you can probably add $1 to that. That's why kind
That's
of that
crazy.
350 number is
Yeah, yeah. I
sort of
thought
where
you were
I'm at.
gonna say like 325. So it even being, I mean, that's 10% more. But I mean, I guess that is the inflation worked in, right? That's it. That's just where we are.
Yeah, yeah.
Awesome. All right, we're right about the 30. Unless you have anything else, we'll get to work.
No, let's do it.
All right.